Joining me to discuss, Steve Sosnick is chief strategist at Interactive Brokers. Great to see you, Steve.
Great to see you, Kel.
And you're both sitting here joking about bad breath. What is the breadth problem in the market? I've seen that for, 9 or 10 sessions now? What's going on exactly?
Well, this would be 10 of 10, where the S&P 500 has more stocks to the downside than to the upside. So coming in, when I did the work, we'd had about 5 out of 9 prior to today. S&P up days as opposed to down days, but yet 9 for 9 in terms of more stocks being down than up. And when we look at the broader market today, on the NYSE, it's about 2.5, 2.7 to 1 decliners to advances.
Wow.
Yeah. So what's going on here is it means that the big cap stocks, because they're so big, because they're so dominant, in today's case, Broadcom is deservedly up, that can paper over a lot of ills. What you want to see in a market is broadening out. We were seeing it for a while, where you had mid-caps doing well and you had the Russell 2000 doing well. But that seems to be stalling a bit, and that's telling me that it could be a warning sign. It's certainly a bit of churn going, a lot more churn under the surface than you think. But I do have to wonder if a little bit of the honeymoon phase of the market is wearing off a bit.
Sure, or with valuation so high.
Exactly.
I think back to ChatGPT was launched in November of 2022, and November of 2021 was when the NASDAQ peaked. And I always think, what if ChatGPT hadn't arrived when it did? I think for sure the economy would have been in recession. The market was already doing terribly. Okay, maybe it recovers, but we would have nothing like the drivers that we've had over the past 2 years.
Well, think about it also. That was November 22 was pretty much when the market bottomed, when this current rally took place.
Coincidence or not?
Some and some. I mean, NVIDIA was at that point kind of, a
video game company.
A video game and cryptocurrency mining company.
True, yes.
And crypto had sort of lost its luster at that point. Obviously, Jensen Huang is great at pivoting. And even by February of 2023, they were leaning into AI super heavily. And now you're seeing it now with the reaction after Google's announcement, Alphabet's announcement with the quantum computing. People are leaning into that. The people love a sexy tech theme, and that was the internet 20 some odd years ago. It's AI and quantum now.
But here's the point I can't even believe I think I'm going to try to make, which is, why not stick with the winners? Like, why worry? So everyone who's been going into small caps, okay, fine. But look, now they face the rate headwind that might be with us still for some time. They're often not quite as high quality companies. There's overrepresentation from certain sectors that may or may not, fare as great. It just feels like if the technology revolution that's taking place, and thank God it's taking place, why not just kind of be either in the broad index or even in some of those names and just think this is the thematic winner for the next however many years?
Because, trees don't grow to the sky, and a lot of it has been because of multiple expansion. And so let's say of the S&P being up, call it about 70% since November 22. I'm cuffing the numbers a little bit. About 60% of that is margin multiple expansion.
Wow.
So, I mean, how much yes, those stocks have very, very dominant positions. You can argue almost oligopolistic positions, right? Like duopoly in cell phone manufacturing, in cell phone systems between Apple and Microsoft. Apple and Google. We can go on forever. So they have tremendous market power, but how much can you keep paying for that? And the other issue is, if the base underneath, the foundation on which the market rests, keep getting hollowed out a bit, at some point it sort of topples over. And if people start to leave the market in any sort of way because they lose faith in stocks, that becomes very tricky when you've gotten so top heavy. But in the short to intermediate term, they are money-making machines.
I thought it was interesting that you weren't even that impressed, and I'm relatively with Broadcom's results because, you said, look, they were pro forma. This is not GAAP. I mean, it's just a good reminder that we can get a little carried away sometimes with the excitement that is warranted over how much better they're doing this year versus last year.
I wish I could go through life with pro forma earnings, ignoring any expenses that I deem as inconvenient or telling a bad story. But that's really what pro forma is as opposed to GAAP. And the difference in Broadcom's case, about 50 cents a share on an ongoing basis. So, yes, they make a lot of money. Yes, their guidance was extraordinary. And if they can meet that guidance out to 2027, God bless them. But, yeah, this is one of the fundamental things is at some point, we can't ignore the inconvenient stuff forever. And that's why, the way I look at it here is, the weather has been generally very sunny and very
fair,
pleasant. But it doesn't mean you shouldn't carry an umbrella. And one of the things I see in options pricing is there's a big spread between below market puts and at money puts in terms of their implied volatilities. Yet at the same time, the absolute implied volatilities of those protective puts is relatively low. So they're almost simultaneously rich and cheap at the same time. But it's telling me that there are people out there poking around for insurance, or at least not willing to forego insurance.